This is my course for beginners. Okay, so what we want to do is I want to show you about the stock market and how to invest in stocks. Okay, so the first thing you need to know is that what drives stocks? What drives the stock market? And you know what the answer is? No one knows, because if everyone knows, everybody will be making money and there'll be no stock market crash. So the point is, you need to realize right now, no one knows exactly what drives the stocks. The second thing you need to know is, so what do I do? Somebody is making money. Yes, somebody is making money. Maybe hopefully it's you, or maybe not. So what drives the stocks? Well, at the end of the day, maybe two things. The first one is obviously you need a company that makes money, because the company doesn't make any money, then you cannot have anything. So you have to look at the financials to get a beta of 1 and get a P ratio around the market, which is around between 30 and 50. So you're not too high. Okay. So at least you have that covered, so you don't have too much of volatile stocks. What does that mean? It means that if the market goes up, it's going to kind of follow, right? Now, the next thing you need to know, you need to make sure that whatever company you have, it is a safe company. What do we mean by safe? Well, essentially, make sure that take a look at the EBITDA or the cash flow and make sure it covers the interest expense on the income statement. Simple as that. And make sure that the debt over the EBITDA is not too high. So basically, you're looking at EBITDA to interest expense of 10 times, more than 10 times, and debt to EBITDA of less than 3 times. So you don't want it to be too leveraged. You don't want to have any problem with the banks. Just in case there's a problem with the financials, right? You don't want them to be worried about the banks and payments due. Then make sure that they do not have large amount of payments coming due. You need to know what the company does, right? You need to know, is this a Tesla company, is this a tech company, is this a retail company? What is a company? What does it do? What's its business? So you're comfortable. So at least you know you're not paying too much for it. You know the company is going to be safe from a financial standpoint, but you also need to know how this business is going to disappear in a couple of years. So you need to understand what they do. That is important, right? Once you have those three components, the safety, the valuation, and the business, then you get more comfort in owning the stocks. Then I tell you, don't look at it every day, right? If you look at it every day, you're going to get nervous, especially in the environment that we're in, with the Fed doing what they're doing. Are we in a recession? Do we have inflation? What are they doing? Is that going to be a problem? It's going to be too much for you to think about. So make sure you pick the right stocks and you just hold on to it. Don't buy all of them today. Spread it out as much as possible, and you should be okay at the end of the day. Over time, stocks do go up.